everyone, this is the pre-market report video for today 11th July 2023 in the Indian stock market in terms of Nifty and Bank Nifty. In yesterday's video, we discussed in detail about the positivity around Reliance. Thus, throughout yesterday, it increased not 4% but near 4%. So, Reliance alone contributed for 78 points in the Nifty on the positive side. On the contrary, lot of brokerages downgraded the Indian IT stocks, especially HCL, Coforge and Persistent Systems. So, throughout yesterday, IT stocks drags the Nifty. Thus, the volatility in the Nifty index was not created by Reliance and IT stocks, rather than it was by Bank Nifty. After the opening, Nifty remained within the range of Friday's session. In the end, Nifty closed with a gain of 24 points and Bank Nifty underperformed the Nifty by closing with minor loss. Another one very important thing to note yesterday is NSE cash market trade volume were way lower as compared to the last 10-day average. It clearly shows that market was waiting either for the IT results or US inflation data, and for both of that we'll get to know the answer only in the Wednesday evening. Anyway, sector-wise, Nifty IT, Media and Realty were the top losers, while Nifty Metal and Oil and Gas ended in green. Then in the overall market, declining shares outnumbered the advancing shares as advancing ratio was just 0.68, lowest value since June 23rd. However, surprisingly, both FII and DII were net buyers. FII net bought for 588 crore rupees and DII net bought for 288 crore rupees. Then, after our market hours, all three US major index opened marginally negative, but in the end, all of them recovered its loss. Last Friday's jobs and unemployment data was the first positive. In addition, yesterday, New York Federal Bank released the consumer inflation expectation for June month, which is due on Wednesday. They said they expect 3.8%, which is 0.2% lower than May month. In comparison, the economic analyst panel in Reuters predicted that it will be just 3.1%. So that's the two forecast inflation numbers released by two different entities. Both of them were lower and both of them is in the step towards achieving the 2% US Fed target this year. This is the second positive. However, both the positivity was muted by various FOMC members' interview. Like James Bullard with ET made it clear that they want to increase the interest rate at least a couple of times this year. In connection to that, CME Fed Watch tool predicted over 94% Fed will increase the interest rate by 0.25% in the upcoming FOMC meeting on July 27th. So, the economically sensitive sectors such as transports, small caps and heavy industrials outperformed the broader market, hinting that the economy is strong enough to withstand further rate increases from the Federal Reserve. Anyway, at the end of the day, Dow Jones up by 0.62%, S&P 500 up by 0.24% and Nasdaq marginally increased because of Facebook by 0.18%. But all this drama increased the VIX and moved it above 15 from below 14.5. On the tech stock world, as I said, only Facebook and Netflix closed positive. Coming to Indian ADR in US market, in conjunction with Indian market, both bank and IT closed negative of around 0.5%. Only Wipro down by over 1.5%. Again, it's same in Indian market as well. About GIFT Nifty at 3 am Indian Standard Time, it ended the trading at 19,456, which is kind of indicating 30 to 40 points gap up or positive opening. About crude oil, it dropped around 1% and at the time of this video, WTI crude oil is trading near $73 per barrel and Brent crude oil is trading near $78 per barrel. That's what happened in the global market. Now let's move to the India related one. Yesterday there were really lots and lots of things to discuss, but I believe all are important. So without delay, first, today there is a 50th GST Council meet in Delhi, and in the meeting, group of ministers are going to discuss about gaming and other betting related industry futures. In addition, public health groups along with doctors and economists have requested the GST Council to increase the GST tax band on all tobacco related products in order to generate additional revenue for the government. They argued that a step of higher taxation will also motivate millions of users to quit their bad habits. If they increased the GST tax band, then it would be huge negative for ITC. However, in the same panel, they are going to discuss about the ways and implementation to curb the illegal tobacco import, which in turn hugely benefits the ITC. Since at present, the total illegal import volume was increased over 20% of the country's consumption. Second, Association of Mutual Funds released the June month report. As per that, mutual fund money into the small cap stock investment becomes doubled and the inflows into open-ended equity jumped 167% to 8,637 crore rupees in June. Here, I don't know how to interpret it since already mutual fund invested, so all those selected small cap stocks has been already increased massively. Will they invest more into the small cap? Probably. So we have to be careful in small cap stock selection. Third, on Wednesday, it's not just US, even the India's consumer inflation are also due. Rogers economist forecasted for June month that it will increase to 4.58% due to the high food inflation. It's more of the negative to flat news since it's below target 6%. But it's increasing when the oil price were lower. Think about it, if oil price trades above $90 means, then that will push the consumer inflation to go above 6%, which in turn will make the RBI to increase the interest rate, which is not good. These were the macro and sector related reports released yesterday. Now let's discuss the stock specific. Yesterday, JP Morgan made the Tata Motors stock to a neutral call. They said JLR sales volume increased, which is good, but the order book dropped 29% by quarter on quarter, which is not good at all. So we can expect Tata Motors to be in focus today. Second, as per IRDA report on June month, total life insurance revenue increased over 18% compared to the decline in the last month. This is positive for all insurance, particularly LIC, as it outpaced all the private life insurance company. Third, I don't know the impact, but just for info, the deal between Vedanta and Foxconn joint venture on semiconductor production in Gujarat was called off mutually. As a summary, last night, global momentum slightly improved as US market closed positive, but the worrying thing in IT and bank is far from over. However, SGX Nifty was indicating the gap up opening of 30 to 40 points, then Reliance GDR increased another 3%. Totally, in the last two trading sessions, it's 5%, which was not yet transferred to Indian market. So, we can expect Reliance to be positive as well. And the IT sector now dropped 25% from its all-time high value. So, not sure how much further it will drop from the present level. Anyway, then about the things to look out during the market hours, Germany's inflation and Europe's consumer sentiment is due. And finally in the night, EIA's energy outlook is the one that we need to keep an eye out today. Coming to technical, yesterday Nifty opened positive. However, it was unable to sustain the higher levels as it faced resistance around 19,450 and dropped to around 19,350. So, it forms the short red candle with equal short lower and upper shadow. This candle was formed within the previous day's range, hence can be considered as an inside bar candle. Thus, it shows a reluctance of Nifty to progress above or below the preceding candle high and low, indicating an indecision. However, Nifty defended the 19,300 level, which is crucial for further upside. So, there is a possibility of another attempt to scale towards the upper range of 19,500 levels in the short term. If it falls below 19,300, then quickly it will further towards 19,200 to 19,000 level. Simply we can say Nifty seems to have stuck in the trading range of 19,300 to 19,500. Breakout from this range on the either side would decide the direction of the market. As far as Bank Nifty is concerned, it continued to trade with a negative bias and witnessed follow-through selling pressure. However, at present, Bank Nifty is in the process of retracing the rise it witnessed in the last couple of weeks, and there are multiple supports in the form of Fibonacci retracement levels around 44,840 to 44,587, which could arrest the downside. Moving on, based on change in open interest, some number of both put options and call options were unwound at random between 19,200 to 19,800. It's really difficult to say anything here. So from overall options open interest data, 19,400 got the maximum put options followed by 19,300 and 19,200. Since 19,400 is the short straddle and 19,300 got significant call options, thus 19,200 is the support to look out for. Then the maximum nearby call option is at 19,500. So 19,500 is the resistance to break. Then coming to Bank Nifty, based on overall options open interest data, huge short straddle is at 45,000. Then the next nearby maximum call option open interest is present at 45,200. So 45,200 is the resistance to break. Regarding put option open interest, 44,500 is the next nearby maximum put options. Thus 44,500 is the immediate support. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I am not a SEBI registered advisor. I am doing this for my and viewers' educational purpose only. Thanks for watching.